I'm John Hanna for CDTV.net here in New York City, and we have Dirk Van Dijk, Chief Equity Strategist at Zacks.com, joining us from Dayton, Ohio. Good afternoon, Dirk.
Good afternoon, John.
How are you today, sir?
Yeah, I'm not doing too bad. A nice day here, and looks like spring is finally coming now that we've got the longer days and all that stuff.
Yes, and also we're getting some allergies now. Allergies coming up.
Yeah. Well, they haven't bloomed yet, but I'm seeing my tulips come up. So, yeah.
There you go. Now I got a question for you. The jobs number that we've gotten so far. What are your thoughts about it?
Yeah, I do think that we're the labor market is definitely picking up. We just actually learned today that the number of job openings, while was unchanged from December, is up 21% year over year. That's pretty impressive, and up 45% from a year ago. Now that's a January number, not a February number, but it's a pretty impressive trend, and sort of I think we've finally gotten to the point where it's like a self-reinforcing cycle. More people get employed. That means more people have income, which means that more people go out and go to the Olive Garden, and therefore the Olive Garden needs more waiters, cooks, and busboys. And then they're employed, and they in turn go out and spend some more. And so we're sort of in that sweet part of the cycle. Now the unemployment rate was unchanged at 8.3%, but that was pretty much due to an increase in the civilian participation rate, which is finally nice to see. And sort of those discouraged workers coming back into the workforce, and that had been on a pretty nasty downward trend, the civilian participation rate. Now, some of that is demographic and is sort of secular in nature, but there's also a big cyclical component. People get discouraged when there are no jobs out there, and you say go out and give your resume, and they say no, give it again, no, and eventually when they call up and say, have you looked for a job actively in the last 4 weeks? And people say, no, I thought I already went through my contacts, and several times, but then when they start seeing things pick up, they say, yeah, well, time to start looking again. So the unemployment rate was stable this month, despite that the payroll survey, right, which is what the unemployment rate is based off, the household survey is based off of, showed even better growth in jobs than did the establishment survey. It showed a total of 428,000 jobs created in February, whereas the official payroll number just showed 227,000 jobs created in February, of which 233,000 were private sector, but the government laid off 6,000. But that's actually a pretty nice improvement over the trend in government workers. Because we had been seeing 25,000 or so per month, leaving the government employment. So even we might start seeing a little bit less drag from the government sector going forward, which would be a very positive development. Pretty widespread gains by industry, mostly in the service sector, but then again, that's where most of the jobs are. Where we had added 209,000 The manufacturing, we added 31,000. Also, both the December and January numbers were revised up very nicely. We were originally, it was reported that we had 243,000 jobs created in December. Now it looks like we created 284,000, and on the private side, that increased to 285,000 from 257. And then, December also had, the total jobs number, it's now saying it's 223 instead of 203, and, the original report of 200,000. So, you add that into the upward revisions to what we actually were created in February, and, we're getting very close to, an almost 300,000 jobs a month pace, certainly on the private side. And that over time should bring down the unemployment rate and put a nice dent in this still very large army of unemployed and underemployed people. But even on the underemployed side, if you add in the people who want to work full time but can only find a part-time job or have had their hours cut back, so they're only working part-time, and the discouraged workers and all that, that unemployment rate fell to 14.9% from 15.1% in January and 15.9 in a year ago. So even there we're seeing some nice improvement. And it was just another good solid report. We even got some nice movement on the duration of unemployment, which fell to 20.3 weeks from 21.1 weeks, both in January and a year ago. That's still a ridiculously high number, but at least we're starting to see some nice movement in that direction. Because we're actually they had a big drop in the number of long-term unemployed. No, still talking 5.4 million people who've been out of work for more than 6 months, but it was a drop of 92,000 in the month, and it's down almost 600,000 over the last year. So we're making slow but steady progress. But anybody just stepping off the spaceship from Mars, looking at things, would say this is not good. 8.3% unemployment, and still well below the number of jobs we had before the recession started, and in the meantime the population has grown, yada yada yada. So we still have a ways to go. I still see unemployment as being the primary economic problem that we have, not inflation. But we're slowly chipping away at it, and all the numbers that we've seen elsewhere sort of confirm that thesis, that it is getting better. And over the last year, we've added 2.2 million jobs. That's not all bad. That's a very healthy run rate for job creation over a year. Unfortunately, it's starting from such a lousy base, but it's a solid pace of job improvement.
There you go. Well, let's hope that this will continue on to the summertime and the rest of this year. So that's Dirk Van Dijk, Chief Equity Strategist at Zacks.com. joining us from Dayton, Ohio. And I'm John Hanna for CityTV.net in New York City.